YouTube, how are you? We have a very important topic today. We're going to be going live on Facebook, and we're going to talk about something that, if you have never experienced this, congratulations. You are one of the unique few. We good on Facebook? Are we live? We're good. We're live. Ladies and gentlemen, you take that trade, you lose money, you start getting angry, you're wondering what to do next. Should you trade? Are you going to trade emotionally? Are you going to lose even more money? Is it time to stop? God, you're so pissed. Why does that happen? How do you really overcome trading anger? I am Mark Melnick. This is the Newsbeat Show. Good evening, ladies and gentlemen. Welcome to the Newsbeat Show. We've all experienced it before, and if you haven't, you are one of the unique few individuals on the planet where a certain trade gets you angry, or let's just say it brings out the emotions. I mean, even on a really good trade last week, I had a $20,000 trade, and what really made me happy about it was the thought of all the money of the large amount of people in our trading room have likely made. Again, I don't see their track results, and I don't ask for brokerage statements for anyone, nor would I ever want them. But just to see the ecstaticism in the room from a winning trade is actually the most exciting thing to me now in the market. The $20,000 like I made, I could have a lot of those days in a year. I could have over 50 to 100 of those days in any single year, depending on the market, depending on, the availability, depending on the news, depending on what's coming out there, of course. It's all dependent on what the market is willing to give us. But on a losing trade, sometimes we do feel anger. And you feel that anger, and how many people have cursed out loud, or at least in their mind, after a losing trade? Doesn't everyone? I mean, I don't know. Maybe. I mean, maybe it's just the Brooklyn in me. Sometimes I curse when I'm happy. Sometimes it's F yeah, I made, 20 grand. People get angry all the time, and it actually, I think it's a result of many things, but I really, as director of trading psychology here at T3, as well as running the largest room here in T3, I thought it would be I think it would be the right moment to start delving into the psychology of why you get angry, and even more importantly, how to overcome it. Now, some people, they just like the answers. There's a lot of people out there who like to be told this is why something is happening, and, you just have to recognize. So what, a lot of things are is, I could come to you and I could say, I have a new strategy that I'm batting 80%, and you might get drawn to it is because you're looking for something consistent. Or I might come to you and say, are you tired of losing money? Do you want to start making a lot of money consistently? And I already piqued your interest because I'm probably talking to the vast majority of people. The truth is, when you start talking about anger in trading, many people will tell you ways to overcome it. Now, to this day, um, I never do an individual trade anymore that makes me like really angry in terms of like to the point where I'm negatively cursing as opposed to an F yeah, it's like F this. Um, I rarely get to that point anymore where I actually think like that. By watching this video, you're agreeing to hold me, Mark Melnick, and T3 Live, harmless and not responsible for anything portrayed on this video. In fact, consider this a huge comedy show. So look, I don't want you to think, you know, some people, believe it or not, don't think that psychology plays a role in your trading. Think again. Every day we do thousands of things we don't consciously control. That is actually a good thing most of the time, believe it or not, as we'd never get anything done if we actually think about taking each breath or each walk or moving our facial muscles to smile. Should I smile now? Should I breathe? No. Okay. Whew, that was a close one. Almost died. Imagine you had to think about all the things that you do. on a conscious levels, but but that same autopilot program um, uh, that is embedded within which is embedded within humans helps helps program us to navigate the outside world. And when it comes to trading, um, sometimes we go on autopilot as well. We can't really turn these programs off. And I think that is something that why most psychology talks on trading will fail, because people will come and they'll just tell you, for example, and I always use this as an example, to like leave your feelings at the door as if it's a physical thing in your pocket. Okay, let me just take it out. Here you go. Let me just check it in at the coat check and I'll go in and trade. We can't really turn these programs off, but we can become aware of them, and we could actually take steps to neurologically reprogram ourselves. And the first thing I'm going to talk about today is availability bias. And what you most readily recollect isn't, believe it or not, necessarily true, but your mind tends to think it is. Research and thorough digging can usually route out inaccurate common knowledge, so all traders I advise to personally check facts and figures before proceeding to use such information. For example, somebody could come to me on the phone, whatever, email, whatever, I meet in person, uh, whatever it is, and I can meet somebody and they could say, well, I like this strategy, I like this strategy, or I don't like this strategy. And I could come to them and I could say, well, how often do you make money just using this strategy? And that sort of throws people off. That sort of throws people off. You see, what us gurus do, and we do it from a very honest place, is we actually bombard you with several strategies. Because if we come to you and I say, well, here are here is this setup I like, here's this setup I like, here's this setup I like, they could all be based on something completely different, things that have different probabilities of working, different probabilities of, of course, failing and whatnot. So yesterday, for example, we gave you the level of Amazon of 1723.87, $1,723.87 support. Today, Amazon hit $1,722. But then, looking at, for example, a Mark 5 long in CrowdStrike, the play sort of technically worked right over here, because if you bought through, you actually did bust through day highs and pulled back. But if you were in options with a spread, like I was, you could have lost money on this trade, which I ended up losing as it flushed right underneath here. I ended up getting stopped out of this crowd strike here today. And it was a different type of trade, for example, on the CrowdStrike than the Amazon. See, I like highlighting, I don't like just talking about my good days. I actually like highlighting the bad days so we can relate better on what I'm trying to accomplish here. What harms even more traders, though, are their own experiences, believe it or not. Your experiences in the market can harm you massively. Say you read a strategy online or you watched a video from your so called favorite, yet not the cutest guru in the world, and everything looks good besides the face on the strategy side, and so you start to use it. You lose, for example, 5 trades in a row. Your own experience now tells you the strategy is garbage, useless, and failed you. It's only fair. You batted 0 for 5 on it. But is it? It could be. It could be garbage. But the truth is, you don't actually know. Your mind has just tricked you into assuming it is. The problem with personal experience is that it is the most readily available data source, yet almost always relies on small amounts of data and smaller sample sizes. That is the funny thing. Be aware of these small sample sizes. You don't know whether something works until you test it thoroughly. For a strategy, I like saying you have to trade it at least 100 times before you know how good it is. Because I did a test with somebody where, and you could try this test, and this goes back to why I don't like the 43-57 rule. is what I talk about, and that's a strategy that works 43 to 57% of the time. Because what's going to happen is, and again, it averages out at 50 in between. Let's say you have a strategy that works approximately 50% of the time. On a really good day, you might be batting 60, 65% over, whatever. You could bat 100%. You could take one trade on a 50% strategy, have it work. Then one trade again the next day, and it could work. And you could be like, this is the most incredible thing, right? But you don't realize is that you're actually enforcing a potentially negative habit based on your personal experience on those 2 days. So if I come to you with a 50% strategy, and I've been doing this broadcasting job for 12 years, and this is going to help you understand it. If I come with a strategy that works 50% of the time and I spew it out, and I get 100,000 traders to take one trade off me on different days throughout the year, for example, most likely 50,000 of them are going to be like, wow, this Mark Melnick guy is amazing. And then they're going to try, those 50,000 people will try another trade. And most likely 25,000 of those people will fail, and 25,000 will continue to believe that what they're doing is right. And then they'll do a trade the next day, and then 12,500 will drop off. And then some of the people who dropped off will try it again and make and lose. And they'll just be within a complete random chaotic flux of uncertainty, in which they have no idea what is actually going to work for them. The truth is, I have this Mark V for me on earnings works the majority of the time. I actually shared my entire trading game plan for earnings this season, and it's going to be big, and it's going to be, there's a link in the description if you haven't seen it. The so you really need to have a higher sample size of things before you know, and this is going to actually help you not be angry as a trader. Just follow through with what I'm saying here. The whole point is if I just tell you to leave your emotions at the door, it's not going to help you. It's not going to help you also if I just explain the problem you have. You have to do a bit of both. You have to explain it so the mind knows what it's doing and then apply it. Yale did a research study report that on a placebo effect, if you actually told the subject, the patient, what the sugar pill they were taking was supposed to do, you actually had 200% higher effectiveness rate. You want to know how powerful the human brain is and the body is? Think about that. You're given a placebo pill, which is a sugar pill, and you give half the people the placebo pill, half the people a drug on a double-blind placebo study. I don't want to go into the science of that. But what happens is on that placebo study, you actually tell the people what it's for. So let's say it's for joint pain, making it up. And you give somebody a sugar pill and they say, what is this pill? And you say, this is for your joint pain to fix it. 200% increase in effectiveness on that sugar pill if the brain knows exactly why it's taking something, even though it's a sugar pill. The next thing I'm going to talk about, is loss aversion. Our mind views a loss more significant than an equivalent gain. We don't like to lose what we already have. When we have a losing trade, we may actually try to avoid realizing that loss, which means we open ourselves up to an even bigger one, which is why, the common adage on Wall Street is you have to set your stop and stick by it. And whether that's true or not true, it's just really a cop-out way of saying that if you get caught within this cycle of batting 50%, you're never going to achieve consistency. And if you're going to get emotional, which is absolutely inevitable, you have to obey a stop loss. So we rationalize it by saying the trade will come back in our favor, for example, as you're holding it, or we will give it a bit more room, expanding the stop loss, or say we are right and the market is wrong. So we hold the trade out of spite for the market being so stupid. And all these reasons stem from not taking a loss, for example, when you should. Don't fear losses. Embrace them. Embrace them. Embrace your losses. Plan your exits before trading. Plan what you're going to do before you open a trade, and you're going to be fine. Really. We're going to talk about more of how to overcome it. The next thing people suffer from is lottery syndrome. And this involves seeking out big payoffs with typically no real well-defined strategy. This could be, walking into earnings season, just, taking random earnings ideas to, long the banks, short the banks, long this, short that, long Amazon, short Facebook. And, the chart looks strong, or the chart looked weak, or the chart looked like this, or is a head and shoulders, or is a cup and handle, or is Mark Melnick's favorite pattern. And you just went ahead and you jumped in it. And you're just sitting there and you're literally pulling the slots and you're waiting to see your outcome. And you're really not going to break out of the 43.57 range utilizing strategies like that. And the error here is related to availability bias because it's very easy to find a price move in hindsight from which you could have profited handsomely. Look at that big gap up in earnings. Look at that big gap down in earnings. You would if you were long here, or if you were short here, it makes it appear easy to pick these big winners because they just seem to be everywhere. When you walk in a casino, the first thing you hear is ding, 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 somebody winning money somewhere on the floor. You don't know where the sound is coming from, but you hear it. It's easy to forget that there are thousands of potential stocks to trade, and you're not only needing to find the right one, you need to trade it exactly at the right time. If you do not happen to get into a big price swing, it also needs to be traded well. Most people have no idea how to handle this situation when it develops. They take a small profit only to watch the price continue to move favorably without them, or they hang on too long and give everything back. This is something very common that I overcame as a profitable trader. I like the small profits. I do. I like the small losses. I love them. Trading with the hope of hitting it big on a few trades is a fool's errand. Practice trading common market tendencies. It's in those moves that money resides, not in the elusive unicorn trade. One of the things today that we were, watching, I didn't call a trade in it, was this SES we're watching in the morning. And here, the stock closed at $5.43, opened up at $10.15, dropped to 781 and exploded to $26 throughout the day. Here's a 5-minute chart and saying, yeah, you see these numbers on the side? They're in $5 increments. Insane. Absolutely insane. Next thing is knowing versus doing. Our minds often convince us that if we know something, we could do it if we wanted. I could quit anytime. I could do it anytime. Take something, losing weight. I'm in a situation where I could lose 10 pounds. And most people know that improving their diet and more exercise will help them lose this weight. Yet rather than follow this, many people seek out new information instead, like the latest fad. Seeking information is often just a rationalization for not doing the work that needs to be done. It feels productive, but it isn't. Similarly, there are basic guidelines traders should follow to succeed, which often go ignored. Like, I already know this, some may say, or yes, but have you done it? And I'm sitting here thinking to myself, like, you know how many people, will come to me and saying, well, what did you do? You know, uh, did you do that trade over there? Did you trade the SES today, Mark, or this psychotic badger meter was it BMI? No, it was BIMI. Here it was. This was the name today. Stock opened up at $1.55, shot up to $11.82. um, like even in the room as we're talking, here's a girl. I believe you're from Thailand, Holly. Thailand or the Philippines, one of the two. And she says, she's been in this Vietnamese. Appreciate that. She Vietnamese. And she says she's been in the room for 2 years. She's saying this right now. And now it's the first 2 weeks she had with no losses. Jesus. but I keep learning and I'm confident now. She says, I used to win big pretty much and lose big, and she doesn't like that. She wants consistency. And after 3 months of doing this, she's going to increase her size, as she says are my teachings. So she says she just wants to lift up the people who are losing because she has been there and now she is confident. And I am going to instill that it's going to take longer for some people. Like Holly, it took 2 years. And I could promise you that Holly right now, and she could agree or disagree with what I'm going to say right now. Was it worth the entire journey? Was it worth all those big wins and big losses to get to where you are today? And regardless how she answers, the majority of people will say yes. The majority of people are going to say yes. It's my honor, Holly. You don't have to thank me. It's my honor to help you. You know, so many people come to me, but like, what did you do? Like, I'll give you a perfect example. Like, I called the bottom. I'll give you a perfect example of the mentality. I called the dead bottom of Amazon yesterday. You can watch the video. We gave you the level 1723.87 dead bottom. It was 1722. It broke by $1.87 and then exploded back up Amazon today. But so many people come and say, "Well, Mark, did you trade Amazon? Then it's not a good strategy. Did you trade it?" And I'm sitting here, and my initial reaction is, well, no, I didn't trade it. That's how I think in my mind initially. My second reaction is, like, sir or ma'am, like, I've made millions of dollars trading. I'm a millionaire trader. Like, does it really matter what I played or didn't play? Does that really matter to you if I played that Amazon or not? What does it matter if I did? The real question is, did you do it? Is that part of your game plan? Is that part of your methodology? And that's the next part of me that I stop and I think about, because I'm thinking about there are traders out there who get so, and this is a common thing on Wall Street, and it's okay, it's not your fault. But there's a common thing on Wall Street that if you are following somebody who makes a lot of money, like myself, for example, or, even bolder claims out there, like some of the penny stock gurus who are turning, my $5,000 into 10 million and my $10,000 into 2 million, and you see numbers like that. I mean, people just get sucked into the basic numbers. Everything else goes blank. And the same thing actually happens when you see a slot machine. You ever see the big slot machines in Vegas or Atlantic City? What do you see on top? In the middle of all the slot machines, a huge lit up sign saying jackpot 11,072,000. You slowly see the number going up as you watch it. And you're so sucked into that number that it drew you over the machine to put your money in and pull the slot. And I'm telling you this because this is what I do. I am not referring to anybody out there. I'm not making, again, I would say there is a fraction of 1% of the users here who think like that I might be targeting somebody in the industry. And just so you know, before I continue and I tell you how to solve your anger and I change your life as a trader forever with this one silly video that I'm doing tonight, did you notice that I make fun of my face in the beginning of this video? I really don't think I'm the ugliest person on the planet. I don't think I am a handsome devil either. By your third beer, you will think that I am a handsome devil. But I try to keep things lighthearted because most traders will learn more in a lighthearted environment. For Craig, it's the second beer, and then I'm a handsome devil. For some people, it takes more. Craig's a cheap date. That's why Craig and I we're like that. But like I do it because that's my stupid humor. Like if you actually see my wife and I, like there's a running joke with my wife and I that Mark Melnick has mad game because I got somebody like you, pointing to my wife, to marry something that looks like this. So obviously I got game. And like we joke around. Like that's my that's my stupid humor. So I don't want you to ever think like I'm targeting any one individual if I talk about like a penny stock or a certain strategy, because here's the bottom line. If anybody out there actually got offended by that, they are doing something probably very wrong with whatever service they're offering. I have something where I turned 10,000 into 2 million. Is Melnick making fun of me? No, congratulations. I wish you the best. But if you didn't know, you are going to destroy the people around you in massive numbers. Yes, 100% of people aren't profitable, but 99.99999% of the people who follow you will not be profitable. That's what I'm saying. Okay? And I'm here to just really inform you of the things that are out there. So back to getting over your anger. Okay? You know, the your guidelines include making a trading plan and only focusing on one, maybe two strategies. The whole Bandit course, the beautiful thing about the Newsbeat Bandit course is it's the only course that I have seen out there that literally encourages you to only do what you do best, whether they're my strategies or not. Because you should be able to answer what is the one thing you're best at. Now, how does this get into getting over my anger, Mark? I'm getting to that point. But as the placebo effect and knowing what you're trying to accomplish here, I must explain to you exactly what's going on because if you do not understand it, you're going to have a hard time solving it. Okay. You need to become desensitized to other people's ideas. People mistake or rationalize knowing a concept for actually following through and doing it. Instead of following these core concepts that everybody shows you out there, they go on another information binge. But more information is useless if you don't apply it. Eventually, you need to stop searching and start applying what you know. So, what's actually happening is your mind is tricking you into being a losing trader. Your conscious efforts are undermined by strong emotional and subconscious forces. And as traders, we need to focus on our actions and results. These don't lie, yet our minds can. To avoid availability bias, I want you to challenge common knowledge and make sure you're using larger sample sizes. Loss aversion is lessened by practice and seeing with your own eyes that even with lots of losing trades, you can still be profitable with a lot more winning trades. The lottery syndrome is counteracted by evidence and asking yourself how the hunt for a big winner is really going. Finally, knowing you should or shouldn't do something isn't enough. You actually have to put that in practice. So we're going into earnings. I did an entire video. Of what I am going to do in this new earnings season. And I have strategies to buy weak names, to short weak names, to buy strong names, to short, other names. And I know that even on something stupid like the VWAP reversal, that it's 81.5% effective for earnings names in the month of September of this year. 81.5% effective. For every 5 of these I take, I'll on average win better than 4. And we go into how to do these strategies, by the way. There's a link in the description. Definitely watch it after if you want to know I'm going to trade it, because today is definitely the calm before the storm. And the reason why we have these talks now is because being an angry trader is going to destroy you. Here, I got a little this. How many traders feel say me if how many traders feel like this after a losing trade? You feel like the angry bird, right? You're like pissed off and you feel like the angry bird. You feel like the angry bird. I used to be the angry bird. I don't get angry anymore. And by the way, I have nothing but love for birds. So many of my passwords were actually named after my dead parakeet from many years ago. Is that too much information? I know there's some people out there who are lovers and they might get offended that you know, I'm a bird lover myself. I'm an animal lover. Okay. So Buddha said, you know what Buddha said, ladies and gentlemen? Buddha says, you know, Man who stand on toilet must be high on pot. No. What Buddha said is holding on to anger is like grasping a hot coal with the intent of throwing it at someone else. You are the one who gets burned. You ready? Holding on to anger, this part is not the joke. The first one was. Holding on to anger is like grasping a hot coal with the intent of throwing it at someone else. You are the one that gets burned. Beautiful, so true. Trading and emotions do go hand in hand. There is a distinct need to feel in control. Fear can be overwhelming, and reactions to things not going as expected are hard to contain. The thing that the thing that you need as a trader is to win every time, and you forget that the markets are in control, not you. And you don't allow yourself to mentally lose. Mentally, you're not allowed to lose. You don't map your plans that the market will suddenly spin in a different direction. You usually only, you know, you just have to win. And typically, the shifts are driven by mass hype, and for the trader, that can be seriously aggravating as they know the reaction is based on fear or hype that is not founded on statistical or empirical evidence. However, whatever the cause, the fact is that traders' positions can be put at risk, and the reaction is inevitably going to be frustration, anger, and stress. And this is not going to be conducive to working out the best response, as a trader needs to have a focused and calm mind with rational thinking. So there was a research report in the journal of There's a research report in the Journal of Behavioral Decision Making. Professors Jennifer Lerner and Larissa Tiedens produced a paper in the Journal of Behavioral Decision Making about the angry decision maker and what their profile looks like. They've used as their basis scientific research that looked at how anger influences decision making. And overall, the results are as one would expect, as it directly influences all thoughts, words, deeds, as well as perceptions, rationalizations, beliefs, and ideas. The trader who has become angry starts with the premise that they are right, but their clouded thoughts will disable their rationality. The research confirms that once someone becomes angry, they gain a greater certainty that they are right, are overly optimistic, and have a need to act. And this is definitely not an ideal place for a trader to be when making decisions. Scientifically, if you believe there's scientific research, proven. When considering the angry trader, it's very evident that they will start acting impulsively and will start decisions that are not based on any evidence or statistical facts. They may find they come out ahead, but it will most certainly be down to luck rather than judgment. The greater risk is that such impulsivity and reaction becomes integral to the entire trader's approach, and the driving force of fear that losing can create, added with anger, can ironically make the traders start to feel that they can do whatever they want and that they have the winning formula. The results are never going to be good enough, though, as their impulsive trading will usually mean they ignore the risk element of their planning and losses will increase. Ladies and gentlemen, trading is not a hobby, it's a job, and its success depends on a clear head and the ability to manage the psychological challenges of the market. Most certainly, a trader should never operate when angry, as the resultant of an impulsive trading is not going to deliver success. Anger needs to be managed, and every trader needs to have a strategy, a consistent strategy, a true consistent strategy, not being taught by somebody who has no consistency at all. Empirical evidence, statistical evidence, combined with simplicity. And that is a beautiful thing. And that is how traders will ultimately climb out of the hole from wherever they are now and reach that success. Because with emotional reactions to situations to ensure that they are trading at the peak of their ability and not subjecting themselves to mental anguish. Just feel like I need a deep breath after that one. Now, you might say, Mark, were you angry just now? And I wasn't. I was passionate because I believe in what I am saying so deeply. And over my 20 years as a trader, 12 years as a trading broadcaster, and going through a lot and solving the problems that a lot of people have gone through, it doesn't infuriate me at all. But it gets it to the point where I will do anything that I can, humanly and legally possible, to ensure your success. Inevitably, if we're being honest, I am not going to succeed for everyone because 100% of traders don't make money. But, ladies and gentlemen, I am going to succeed, most likely for the majority of you. And recently, in the past whatever months, I've seen it for the first time in 12 years, where I'm actually able to help the majority of people find true consistency and success. And true consistency and success will come from truly consistent strategies. And that, ladies and gentlemen, is the real answer. Today, off the room, my dears, I batted 1 out of 3 today. I lost an insignificant amount of money. Over the last whatever weeks, what am I up about? Not the best, last couple weeks, I don't know, 50, 60 grand in the past couple weeks. And I didn't even lose like a fraction of that today. But I batted 1 for 3. And even with strategies that work 80% of the time, you have that rare moments where you don't bat as well. And a lot of the traders in the room didn't bat anything at all. And this is the actual beauty behind it. Like this was my note in the morning, and I give this in the pre-market every day before trading. 8:58 a.m., October 14th. That is today in the morning. Good morning, Bandits. Dead day. Quick scalp, maybe. Not a great day for trading. Banks close, bond markets close, coincides with 2 holidays, Columbus Day and Jewish holiday Sukkot. And what that means is there will be a number of people who are away from the market on a day like today. WDC long, it's a 1 out of 10 conviction, which is the lowest conviction rating that I'm even willing to talk about. And I knew it was a day to size down massively. You see, that the funny thing is, there really is no such thing, for example, as a predefined risk unit if you're actually trading properly. You see, if you come in and you say, and I used to be this person, and it's funny, and if you're wondering who I'm targeting myself because 2009, T3 had an office on William Street before they moved to State Street. And we were in a circle discussion, all the traders inside the office, and it was my turn to say something to everyone. And I, in front of everybody, said, whatever you do on your trades, make sure you take the same size on all your trades. So if you go heavy on a trade that doesn't work, you don't give up all your potential winners. And I believed in that methodology back in 2009. I was trading for 10 years at that point. So I was definitely, I would consider myself moderately experienced, not really. To me, you need 4 years before you're past the newbie level of experience, just because you have to see all the random nonsense that goes through the markets. So I was a 10-year trader. I don't want to consider myself a veteran after 10 years. And I believed in that wholeheartedly from the bottom of my heart. And the only reason why I believed it is because I didn't know how to rate my own trades. I didn't know what trade had a higher probability or a lower probability of working. So when we have certain breaking news flow trades, out of the last over 200 of them, it's about 213 at the moment, since 2015 till today, so 4 years, 2015, 16, 17, 18, almost 5 years, a little less than 5 years, 4.5 to 5 years, I did 213 medium conviction ideas. Medium conviction. Ladies and gentlemen, I lost on 3 of them. 3. My total losses on those 3 trades were $16,253.17. $16,253.17 that I lost on those 3 trades out of the 213. Medium conviction for me. I take more size than most people do on my medium conviction ideas. Does anybody want to take a gander or guess on how much I made on the 210 of them? Does anyone want to guess? No, no 25 or 15 mil. No, 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 no. Amy's the closest. Amy's the closest. A little over $3 million. But you have to understand that I was the person who would teach others. I was looked up to in the firm at that time. I was somebody special in the room. And I would tell people to take the same amount of size on all their trades, take the same amount of risk on all their trades. That way, when you're wrong, you don't blow up. And when you're right, you could steadily build. And I believe that from the bottom of my heart. It wasn't true. I only learned later in life as a trader that that was actually not true. It's true if you don't know how to be consistent. If you're using risk units and you do not know how to be consistent, it is very important that you use, a set amount per trade, whether it's dollar amount or whatever, or risk amount. You're risking whatever, $100, $500, $50, $1,000, 2,000, whatever your number is. It's very important because you will not know what's good and what's not good. All the setups will look the same to you. It'll be just a blur. You'll just see it. You'll see a bull flag, for example, or a breakout, or a moving average thing, or a Fibonacci, or a relative strength indicator, or an Elliott wave oscillator, or a MACD reversal, or some moving average clicking together, or some pivot points, or trend line, or whatever it is. And you're going to look at it and you're going to have no idea why certain things work and certain things don't. And let's just be honest, since you've lasted, since you're watching it to this point, since you're watching it from to this point, how many of you out there, honestly, just how many of you right now, honestly, just look at a certain candlestick setup? Maybe you combine it with one of the indicators I told you, and that is 100% of your reason for going into the trade. And it's confusing because you have no idea why you go on win streaks and lose streaks and win streaks and lose streaks. I could prove it to you right now. How many people, I felt that, I don't feel that way anymore. I felt that way for the majority of my career. How many of people felt that way, feels that way? I'll show you why. I'll show you right now. I'll show you why right now that happens. So we're just going to go over here. We're going to go to the roll dice. We're going to go to the roll dice Google game. And we're going to start it right over here. And we're going to just show you this six-sided die. Okay? We're going to show you the six-sided die. I'll show it to you. So you hear me say a lot that you don't want to do a 43 to 57 strategy because that's 7 down and 7 up from 50%. You're batting about 50%. So I'll give you an example. you're rolling a dice right here. This is google.com dice roll, right? We're going to do 10 rolls, all right? So we're going to start. If it's evens, we win. If it's odds, we lose. You ready? Okay. We got a winner. We got another winner. Wow, this strategy is awesome. Oh, I lost. Don't worry, I still won on 2. Damn it, I lost again. Damn it. What's going on here? That's 5 times I'm recording this. Ah, yes, finally a winner. Right now I'm 50-50. I'm 3 for 3. I have a ton of psychological toxicity because I have no idea why these strategies work. Let's keep going. Oh, damn it, I lost. I need an even number. Come on, even number, baby. One time, one time. Does it sound familiar at the poker table on the river? 4. And last roll is a 3. So I won 4 times and lost 6. So right now I'm thinking that if I could just improve this strategy that I'm doing a little, I'm going to go ahead and make a lot more money. And I'm going to go ahead and I'm going to be fine. I just need to figure something out with this strategy. I'm 40%, win rate, and maybe I just need to try it another 10 times. The thing is, when you do a 70, and just to show you like my VWAP reversal strategy for the month of September on earnings names is over 80%. It's 81%. So if we take a 20-sided die here and we basically say, 80%, well, anything that's not 17, 18, 19, 20, we win. And you start rolling like this. 16, that's a winner. Anything not 17, 18, 19, 20, we win. 15, that's another winner. This is why you don't get angry. This is the answer to not getting angry. I'm showing you right now, and I'm just going to do 16. So, all right, so I win again. Wow, I'm winning. Wow. This strategy is the most incredible thing in the world. But now I'm going to explain to you what winning actually entails and actually how you can do it and why you need to sell your positions early. I won again. I could just win again every time. I have to lose eventually. I will lose. I promise you that. Here's the last roll. 10 for 10. 10 and 0 on an 80% game. Now, obviously, that was lucky. Odds were I would have rolled a 17, 18, 19, or 20. The 4 numbers, which would have been 20% of the die rolls, that would have cost me a loss. Now, when I experience something like that, where I roll, for example, 2 numbers in a row of 17, 18, 19, and 20, it doesn't make me mad because I know how many wins I could roll. So the real key to solving angry trading is only doing a strategy that wins most of the time. Now, why do you think I come to you guys? And if you watch my prior video, I talk about trying to even make, I'm not sure if I did, the videos in the comment for how I'm trading this earnings season. Like, why do you think I come to you and talk about making 10 cents? Because if you're going back to this stupid dice game and you're taking a 10-cent win when you're right and even a 15-cent loss when you're wrong with slippage, let's play logical here, right? You're going to make a lot more overall. Oh, here's a losing trade. You want to know why I'm not angry? Because when I click roll again, odds are it won't be 17, 18, 19, 20. And even if it is 17, 18, 19, 20, I know odds are it won't be like that again. And even though I want a winning trade, odds are if I click it again, it's going to win. And odds are if I click it again, it's going to win. And if odds are I click it again, it's going to win. And even when I lose, which will be inevitable, like right now, I just lost, it wouldn't make me angry because I know that I'm using a consistent strategy. So it goes well beyond like the psychology of, the psychology of consistent trader should solely be based on, see, forget about what Confucius say. Forget about what Confucius say. I'm going to tell you what Melnick say. What Melnick say is man who wants psychology of consistent trader must only apply consistent strategy and nothing else. Man who wants consistency must stop doing inconsistent strategies. Man who wants consistency must focus first on what man does best. So when I'm showing you these stupid dice roll, what if I told you you're making 10 cents on the trade, 20, 30, and yes, I do make a lot more on a lot of trades. I get it. But I'm using it for a beginner. Like if I was inconsistent, I can't legally tell you how to trade. I would be taking 10-cent chops the entire time. I wouldn't give a crap. I wouldn't give a crap. 10 option contracts, 1,000 shares. You're a prop trader. Ooh, prop trading firms are so scared now with this free commission rate. I wouldn't be. I would think now is the best time to be a prop trader because with strategies like these, you can just take your buying power and put it to damn work in the way it was supposed to be there for. You see, when I have a large account sitting here, I don't need to use my buying power. It's like cash to me. I could withdraw the damn thing. I could put it in a fireplace and burn it. I could donate it to charities. I can wipe my floors with it after I clean them. Whatever I want to do with it, I can do that with the money. When you have a prop trading account, your buying power is not your money. Your buying power is meant to earn that money. And if you're doing a strategy that is right 7 out of 10 times, you can throw your buying power around and you can swing your weight. That's what I would do. I can't tell you what to do. That's what I would do with the buying power. So I actually think now, especially with these new consistent strategies, if you're willing to be modest on everything. Mark, you know how many people before they turn consistent, Mark, I'm making like $100, $200. This is not, what I'm looking for in the long run. And I'm just looking at the person saying, you're doing everything correctly. I'm making like 100, $200 every day. I'm like, because if you keep doing that, you're going to build your mind, the fortitude of your mind. You're going to get rid of your psychological toxicity to the point where you're actually able to grow as a trader and a human being. You're actually going to make a lot more money. It always starts somewhere. I don't know how much psychological toxicity everyone has. For some people, they have to make those 10, 15, 20-cent chops for months. Some people, they never even want to leave it. There are some people now who are in the room. They literally come and say, Mark, any name you give, I can one and done and chop a dime every single time. Somebody told me that today. There's a person in the room who just comes in, they look at the names on our list, and they literally just take common stock there. They're a prop trader. I'm not going to drop the firm's name. Hint, hint. I'm not going to drop the firm's name, but, you know, it looks good to me. I'm just doing 10-cent chops and I'm leaving the office. So, again, I'm not exactly looking at this trader's brokerage statements, nor would I ever ask to see them. So, what do I mean? We have something, the one and done strategy. He says, Mark, this trader was losing money forever. We have the one and done strategy. Very simple. Choose any Newsbeat name. What Newsbeat name should we choose today? Oh, the only one you're showing me, WDC. Not a stupid scan. Okay, cool. Wait for the first 1-minute bar to close. Buy through the next 1-minute bar through a market order. 59.87. Buys right here. Goes to 21 cents higher immediately. Trader chops out 10 cents. Trader has 250,000 in buying power. He takes 2 to 4,000 shares, puts a 10-cent stop in right away, puts in a 10-cent exit, and he exits. Literally, he walks in the office every single day and walks out generally always before 9:35 a.m. He's in at not. He spends most of his time listening to us talk in the morning. He's in by 9. He listens to me talk till 9:30, and he trades from 9:30 to 9:35 a.m. Walks out and goes to his secondary job. He is raking in $100 to $500 a day consistently, like day after day after day after day after day after day. You're getting bored of making money yet? After day after day. He said he is bored. I swear to you, it's the stupidest thing. He's bored. You know what I said? Guess what I told him? I said, you know what? Take some of the money you have and go to great. He works at a prop firm in New York. I said, take the money, go down to Jersey, and go to Great Adventure and ride some roller coasters. That's what I told him. I said, Great Adventure, go ride some go to Oktoberfest in Great Adventure. I told him. I told him this a week ago. It's like it's boring. When do I size up? I told him to go to Great Adventure. He doesn't really care. He doesn't really care. He's making between an extra $4,000 and $5,000 a month. You think he gives a crap about his fees? You think he came in with a $10,000 deposit to a prop firm? Yeah, they charge him obnoxious commission rates. They charge him platform fees and all this thing, and he's cleaning house and he doesn't care because with his $10,000, he's making $4,000 to $5,000 a month. Other people have to live too. Don't you want to reward the person giving you $250,000? That's why it's the best time to be a prop trader if you're utilizing Newsbeat strategies. And again, can you make 10 cents on Western Digital buying right over here? Not even on this big 1 minute candle here. We're not buying here, ladies and gentlemen. Right over here. Right over here. There was 29,000 shares that gone through on this 1 minute candle, followed by 33,000. Yeah, you could have made a lot more. We're talking 10 cents here. I'm not even saying that you rode the thing up 36 cents and held it and watch it go down and watch it go up and what. No, none of that. You just buy right here, 59.87. You're up 10 cents immediately. You're out. Bye-bye. System off. See you tomorrow. Laziest, most intelligent, most boring trader ever. Love it. Love every moment of it. So what is your goal? Is your goal to not be angry? He is never angry. That trader is never angry. Is your goal to just make money consistently? Is your goal to just bring in an income? Then why the hell are you hanging out with me that long? Get the heck out of there. Take the stupid one and done through common stock and leave. And some people will be like, Mark, I can't do 3,000 shares of Western Digital. That's $180,000 in buying power, you crazy, not attractive, face only a mother could love human being. It's the next time, right? Maybe trading doesn't have to, maybe you don't have to listen. Maybe the Newsbeat service is really just meant to be a 2-3 minute service. Because if your goal is to really stop getting angry, stop suffering psychological toxicity, achieve real consistency, guess what? We could bang it out just about every day. You want to know what's true about every single one of our plays in September? You could have made 10 cents on it using the one and done strategy through common stock. The tricky part with options is the spreads and this, and you try to get a good fill. I know. Why do you think I'm saying it's the best time now ever to be a prop trader, especially if you don't have, the buying power which others have? Because trading doesn't have to be smart. It does have to. It does have to be smart. It doesn't have to. You don't have to have a high amount of intelligence, is what I mean, to be a good trader. You don't have to try real hard. You don't have to understand everything. You don't have to try to catch a 20, 30 point move in Beyond Meat, which it got, by the way, negatively downgraded today. I didn't take my position. So, like, for example, just tell you, just real quick, like how traders adjust. Yesterday, I did a video on Beyond Meat, and it came in, gapped down, and traded like garbage this morning. And if you're wondering why, right over here, because I came in this morning after the video at 6:32 a.m. Wells Fargo analyst John Baumgartner put $125, if you can't read that, $125 target on Beyond Meat. And the name gapped down, and I didn't touch it. That's adaptability to the market. But seriously, ladies and gentlemen, I mean, trading is not difficult. And if you're doing common stock, the one and done is the easiest trade ever. In fact, I'm looking to automate this one and done strategy for massive distribution within the Newsbeat Live community first, because it's just so expletive word easy. That trading could just be the stupidest, most boring. You could just take advantage of early algorithmic action on that 1 minute bar based off of our news flow ideas, and you can make that 10 cents every day. Usually you can make a lot more. I'm using 10 cents as a starting point. And if you're comfortable just doing what the gentleman with his $10,000 deposit and $250,000 buying power does month after month after month, and he's paying a commission rate in which I would never go near, but he doesn't care. He's like, think about it, Mark. He pays $8 a thousand. He's like, think about it, Mark. I come in, I buy 3,000 shares, and I sell 3,000 shares. I paid 48 bucks, right? I paid 48 bucks. I made $300. I net $252, and I'm out the door. I don't care. The firm is happy. He is happy. It's a mutually beneficial relationship. Look, if you enjoyed this video, make sure you thumbs it up. Make sure you share it. Make sure you give it to somebody who is struggling in trading. Maybe it's you. Maybe it isn't you. Maybe this stupid video is just a way for you to overcome your master goals. I am way beyond this 1 minute point. For me, I would rather have a robot working for me, making money on these ideas. That's what I want. I don't have time for this nonsense. I'm running a room here. But as a trader, trading can be as easy as you want it to be. It doesn't have to be difficult. And by the way, this one and done for 10 cents worked 100% of the time for the month of September. And guess what? For the month of October so far. We're 2 weeks in. I could have gone back another month. I'm sure I would have similar results. Trading is not difficult. It really isn't. You want tomorrow's levels today? Maybe you were impressed that we called the dead bottom of Amazon yesterday for today. Maybe you want tomorrow's levels. Maybe you don't care. Maybe they're just numbers on your screen. You just like to hear me talk about it. Maybe you like hearing me saying don't tattoo it on your face. And if you do have a facial tattoos, maybe you have those little teardrops things, and if you weren't in prison, you would be the first of your kind. These levels don't always hit. But when they do, I tend to make money buying through support and shorting through resistance. Don't tattoo them on your face. They don't always hit, and they do change every single day. So with that being said, ladies and gentlemen, I hope you guys enjoyed this Newsbeat show, number 444, and on our way proudly to Newsbeat show 500, trying to make a difference in traders' lives every day. If you're interested in anything we sell, there is also in the description of this video links and whatnot to potentially help pull your trading to that next level. I hope you guys enjoyed this Newsbeat show. Happy trading, make money, and I'll see you guys tomorrow on the Newsbeat live trading broadcast. Have a wonderful evening.